I think the market right now, the best way to describe it is a lot of people are fearful of the market. And a lot of it has to do with kind of the media attention that is going into the interest rate environment. So I think it has slowed down. I don't think that slowdown is entirely justified, but I do think that there's a lot of fear in the market right now. So qualification for borrowers primarily is determined by the stress test rate. So that rate hasn't changed by a whole lot, which just means that borrowers will qualify for a little bit less, but it's not anything too significant. You're going to see qualification go down by just a couple of percent at this particular moment. Now, in the future, as interest rates continue to go up, and they will, that is one way that the government fights inflation, is by increasing the interest rates. That qualification is going to get a little bit more difficult. So if people are concerned about qualification, it might be a good idea to talk to somebody right now, see what they qualify for, because that number may change in the future. The challenges that we're facing right now for qualification is that the stress test rate is going up, or the qualifying rate is going up. As the interest rates go up, so does that qualification rate. This qualification rate is put into place to ensure that borrowers can continue to make their payments in a high interest rate environment when interest rates are going up. So we actually qualify clients at a little bit of a higher rate than what they're getting. To be exact, it's actually 2% above the rate that they're getting, to just ensure that they can actually continue to afford their mortgage payments. Yeah, so I guess the best strategy for an approval is talk to somebody early, right? You want to know what to expect going into that transaction. And as long as you keep your mortgage professional updated throughout the process, they'll be able to give you a really good idea as to what you qualify for. And if you don't qualify for what you want right now, there might be ways that we can get you to qualify for a little bit, higher of an amount later on. You can be paying down debts, etc. Right? So if you know that information going into the transaction, there's not going to be any surprises. So a good idea is to reach out to a mortgage professional and just kind of seek their guidance before going into, actually looking at homes and going into the transaction. The most successful clients, again, are those clients that have ideal credit. So credit scores typically over 680. Down payment, they have at least 5% that they've saved up. And even if they haven't, they have a source of that 5% typically in the form of a family member, maybe a parent or guardian gifting them that down payment. And also stable employment. So clients that have stable employment have a higher success rate of getting approved and qualified for what they want to buy. And these are all factors that go into a mortgage application. It's going to be primarily the income, it's going to be the down payment, and the credit is what most lenders want to see. I think the best advice that I could give is have an open, clear communication stream between you and your mortgage professional, and get your realtor involved in there too, right? It's good to have a communication open with all parties. Expectations are set a little bit better, and any sort of speed bumps or hurdles, they're discussed early on. And a lot of times, there's actually strategies that we can employ to actually get over those hurdles at some point. You might not be ready for a mortgage right now, but in 6 months, we can set you up for that success. If we don't have communication, and then there's a high chance that you might not be able to get into that particular home because of mortgage financing. So communication, I would say, is probably the best thing to do, is keep that communication open, talk to somebody early on, so that you know what to expect.